Hi, and welcome to Random Rogers Big Picture for the week of March 18th, Special Complacency Edition. I got a comment left by a reader who had been left comments in the past and then apparently had some health issues, which I'm happy to say have resolved themselves presumably positively, and that he's back posting, so I'm happy for that, to be sure. No sarcasm there by any means. He is extremely, I would say he's several steps closer to the bomb shelter than I am. He is very worried about what's going to happen here with the stock market and presumably our economy. He is 33% short using some single short ETFs, so a third of his portfolio, as I read this, is in short funds. He thinks that we're going to see more likely a 30% decline in what I see as a major leg C down, followed by the D and the E minors. Dow's 7,800 if we are lucky. He also talks about Joe Battipaglia, the perma bull, has been converted. Says something about Peter Schiff having been laughed at on television. And he thinks that I've been lulled into a sense of complacency when the order of the day is major, major defensive action. Okay, so I think this is a great comment. You know, you're either going to agree with him or you're not. You either have gotten very defensive or you haven't. There's really no way to change someone's mind in this. So that's not the intention. The intention here. The intention here is for you to maybe take a look at your own portfolio or your own thoughts and see whether or not you are somehow lulled into complacency, as this reader thinks that I am, or not. And, you know, it really needs to be a bit of introspection for you as you try to work through this. But as far as thinking I'm complacent, well, I guess complacent about what? I do not see or give really any realistic probability to some sort of unprecedented apocalyptic Peter Schiff-like scenario playing out here. So from that standpoint, maybe I am complacent. Fair enough. But, you know, he gives credit to Peter Schiff here. Peter Schiff's been whistling the same tune for a long, long time. He's going to continue to say the same thing, you know, for the rest of his career, until it happens, one or the other. So I don't know that aligning yourself with someone who's always thought the same thing makes a lot of sense. Battipaglia, the perma bull, having been converted. Well, as I heard his comments on one of the Fox shows, and I don't remember which one it was, he is bearish on the market. I don't remember that being quantified. If that had been something that was going to be abnormal or unprecedented, then I think, you know, that might have come up. But the thing here is making a bet long before it happens on something all done that is unprecedented. That's a pretty tough place to be. If he is right, if Dave B is the reader's name, if Dave B is right, and we're going to go below 7,800. If we're not lucky, we go below 7,800. Let's say the market cuts in half like it did a few years ago, or does worse. You know, something totally unprecedented. The U.S. market, let's say, goes down 75%. The broad market here. I'm not talking about the Nasdaq. Okay, if that happens, well, then are you that concerned with the first 10%? Is preserving that the most important thing? I would argue probably it isn't, because the consequence of it going down something like 15 or 20, well within normal, even 30% is historically normal, and then rocketing back, there's much greater likelihood, based on how the market has usually worked, than the market going down 75%, us being in breadlines, and so forth. You know, another reason I thought of this, and I'm just today, and I'm not sure how to reconcile it just yet, but in terms of us having some sort of depression where the unemployment rate, like the depression from the 1930s, goes up into the 20s, whatever the unemployment rate was, well, we've kind of shifted away from being a manufacturing economy into being a service-based economy. We all sell services to each other, which possibly means, I'm still working through this, that although we may be making less money from selling our services, depending on the service sold, there's greater chance that we won't be flat out of work, as opposed to just feeling pain as a worst-case scenario. I've been calling for a recession for a long time, probably too long. That hasn't changed. I've been calling for some sort of normal bear market to come along for quite a while. And in a way, I've been too bearish about that because it hasn't happened. I would have thought it would have started by now. And the thing I've been saying the whole time is waiting for it to happen, expecting it to happen, don't need to be so far in front of it that I totally miss a big move up. And, you know, that's kind of another thing that circles back to something I've tried to talk about over and over, is having an exit strategy and sticking with it. On the way to down a lot is just about every, like 75% or 50%, is just about every exit strategy there is. So stick to your exit strategy. If it's when things go down 8%, 12%, whatever, as long as you're faithful to it and faithful on how to get back in, then you'll be relatively okay in Dave B's scenario. Well, I've got some allergies kicking in, so I'm going to wrap it up right there.